$1.70. That's the only number that matters right now for Polkadot. If you hold DOT, or if you are thinking about buying this dip, you need to understand that we are standing on a razor's edge. We have a project that is statistically the most decentralized network on Earth, yet it has fewer daily active users than a meme coin launched yesterday. It's a fortress that's currently a ghost town, and technically, we are compressing into a massive 2-week falling wedge that is about to force a decision. A close below $1.70 is not just a dip, it's a structural invalidation that opens the door to 50 cents. But if this level holds, we might be looking at the most asymmetrical risk-to-reward setup in the entire market. I'm putting my money where my mouth is. Today, I'm showing you my exact entry, my hard stop loss, and why I believe this trade is the ultimate test of patience pays. Let's be honest with each other. Holding Polkadot over the last years has been painful. While Solana and the meme coin sector have been printing millionaires, DOT has been bleeding out, stuck in a brutal downtrend. I'm not happy about it. I know many of you aren't either. We are currently trading between $1.80 and $2. We are sitting significantly below the 10, 21, 55, and 100 exponential moving averages. In a vacuum, this is bearish. It's ugly. But we don't trade in a vacuum. We trade context. The market sentiment on Polkadot right now is worse than it was during the FTX collapse. It's dead project territory. And yet, when I look at the order books, I don't see capitulation. I see apathy. And apathy is years where the smart money goes shopping. But before we look at the chart, we have to address the elephant in the room. Why is the price down here? The data tells a story of two completely different blockchains. This is what I call the fortress paradox. First, let's look at the engineering reality. According to ChainSpect, Polkadot is currently maintaining its rank as the #1 most decentralized network in the world, with a Nakamoto coefficient of 178. For context, Solana is at 19, Avalanche is at 31. From a security standpoint, Polkadot is 9 times harder to compromise than its competitors. It's a fortress. Look at the developer activity. It's still ranked 5th, close to Sui and above Avalanche. 76 full-time developers in the last 30 days. The builders haven't left. The lights are on. But looking to on-chain data, this is the ghost town. Daily active users, 2,700. Transactions per second, 1.4. 1.4 transactions per second. The network is essentially empty. And financially, the protocol earnings are negative $370 million over the last year. They are spending a fortune on security that nobody is currently using. So why am I interested? Because in crypto, you buy the divergence. You don't buy when the network is congested and fees are $50. You buy when the infrastructure is world-class, but the users haven't arrived yet. You are betting that the 76 developers will eventually ship something that uses this empty block space. It's a contrarian bet, and contrarian bets require surgical technical precision. So let's go to the charts. This is the 2-week time frame. This is the noise-canceling time frame. We are watching a massive falling wedge formation. This pattern has been building for months. We have 3 specific descending trend lines of resistance overhead, marked here in orange and white. The price is currently being squeezed between this falling wedge in white. But here's the most important number on this chart, $1.70. This is the 1618 Fibonacci extension anchored from the previous lows. This is the line in the sand. We have bounced here before. If we close a weekly candle below $1.70, this structure is invalidated. A lower low is confirmed. At that point, the next logical support is the 2618 fib level, which is down at 52 cents. That's a disaster scenario. However, look at the Heikin-Ashi RSI at the bottom of the screen. It's deeply oversold, but notice the angle. it's slightly curling upward. I've marked the comparison to October 2023 with these white circles. Back then, we saw a similar setup, price compressing, sentiment dead, RSI curling up, and it resulted in a 200% move to the upside. We are also seeing a volume profile point of control up at $4.10. That acts like a magnet. If we can break these trend lines, physics takes over and price tends to revert to the mean. So, how do we trade this without getting wrecked? This is not financial advice. This is exactly what I'm doing with my own capital. I'm dollar cost averaging in this green box, $1.80 to $2.50. I started buying much higher at $4. I'm not hiding that. I'm underwater on those initial entries. But the data suggests we are at the bottom of the range, so I'm lowering my average cost basis here. My hard invalidation is a weekly close below $1.70. If we lose that level, I'm out of my short-term positions. I'm not interested in catching a falling knife down to 50 cents. I'll take the loss and preserve capital. This level coincides with re-entering that broken trend line from August. It would be a classic fake-out breakdown, and I won't stick around for it. However, if we hold here and break the wedge, my take-profit targets are set mechanically. Target 1, $3.60. Target 2, $5.60. This is the 618 fib retracement. Target 3, $11. And if we get a full alt-season mania, I keep a moon bag for $23. I'll be trimming heavily at $5.60 and beyond. I'm here to yield profits, not to marry the bag. So, here is the reality. Polkadot is a high IQ play in a low IQ market. Right now, the market wants memes, speed, and gambling. Polkadot offers security, governance, and institutional-grade code. That is why it is lagging. But the longer Bitcoin hovers in this $85,000 to $90,000 range without crashing, the more confidence will return to these legacy altcoins. The bears are running out of time. They have had their time to push this to zero, and they haven't done it. The staking data confirms this. Over 52% of the supply is staked. $1.7 billion is locked up, earning 11% yield. The holders are not selling. The tourists are gone. It's just us and the believers left. The risk to reward at $1.80 is undeniable, but only if you respect the stop loss. I'm betting that the ghost town will eventually be populated because the fortress is too strong to ignore forever. If you want to see exactly when I pull the trigger on my next buy, or if I get stopped out, I post those updates in real time in my free Telegram group. The link is in the pinned comment. And if you want to understand why I started buying at $4, watch these 2 videos here where I break down the Polkadot upgrades in details. Thanks for watching, stay safe, protect your capital, and I'll see you tomorrow in the next one.